Ladies and gentlemen, on behalf of Captify Consulting Investor Relations team, I welcome you all to the H1 FY26 post-earnings conference call of Bondada Engineering Limited. Today on the call from the management team we have with us Dr. Raghavendra Rao Bondada, Chairman and Managing Director, Rear Admiral R. Srinivas, CEO Bondada Group, and Mr. Satyanarayan Bharatam, Director and CFO, along with the management team. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements, which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to run us through the business presentation and performance highlights for the period ended September 2025, the growth plans and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Presentation. Good morning to everyone. This is Dr. Bondada Raghavendra Rao. Start the presentation. Yes, as informed by Mr. Vinay, this is the post result today. So yesterday we have reported our H1 results, which are very good numbers. I think you might have seen, all of you might have seen in the stock exchange. So this Bondada Engineering Limited, your company, most of you might be knowing that actually who we are and what we are. We are into renewable energy, telecom, Indian Railways, and BESS segments. As of now, and we also have future plans for even defense and data centers. Maybe we are not talking much on those two things because very nascent, and actually a lot of brainstorming is happening on those two segments. But mostly we will focus on that existing businesses, and then vision for 2030 also we would like to bring to some of the highlights to you. Next. Yeah, this is already been told by Mr. Vinay that Bondada Engineering at a glance, and then business overview, then future forward, and financial performance and highlights of H1 compared to last year of H1. Next. Yes, we are into mainly now 4 business segments, that is renewable energy. In renewable energy, we are right now solar EPC, and also we are going to start solar IPP very soon. You might be knowing, all of you knowing that actually we got to GO from AP government that setting up 2 gigawatt IPP plant in Andhra Pradesh. And also, once we commission the plants, we will also undertake the operation and maintenance of the solar power plants. This is what actually our brief portfolio and scope of the work that we undertake in renewable energy sector. Then telecom tower construction, telecom fiber construction, laying of fibers, and even telecom networks operation and maintenance. Then railways. Passive infra, that is 4G dedicated network we are building for railways, and also we are there into other safety projects of railway signaling and railway projects. BESS, this is battery energy storage system. Right now we are setting up the battery storage plants at their existing substations, maybe going forward even at renewable energy parks also we are going to set up these battery energy storage systems. So as I mentioned, data centers also we are pursuing now, and even defense and aerospace also we are seriously pursuing, but not much done work in this actually. Maybe next 1 quarter or 2 quarters we'll come back to you and tell that actually what is that our business plan and how we are what kind of revenue numbers or what kind of growth we are looking at in these 2 segments. We will come back to you later. Yeah, this company is headquartered in Hyderabad. Pan India presence is there. 14 plus years of vintage and vintage is there. Right now around 3,500 people, employees are there. Crystal A stable rating and a great place to work, some of the credentials. Next. So go back. This one?
Yes, sir.
Yeah, this one. Yeah. As I mentioned, all these segments like renewable energy, telecom, BESS or railways. Basically, what we do is EPC services, concept to commissioning of the plants, concept to commissioning of the tower sites, and even railway networks also. We do the design, we undertake the design, then construction, and supply some of the products like telecom towers, transmission towers, substation structures, and even for solar plants, MMS structures. These are all internal. We have pretty good factories in Hyderabad, and where we manufacture and supply to all these products. Not only this itself is we have a subsidiary company called Bondada Green Engineering Limited. Not only our captive consumption, but we also take orders from others, just only as a supply contracts. Then once post commissioning of these sites, then we will also undertake operation maintenance of all the segments that we are working. Like in solar segment, anything after commissioning of the plants, actually we have to, based on the customer requirements and based on the contracts, anything between 3 years to 5 years, we have to manage those plans, and thereafter on mutual agreement basis, we can continue those operational maintenance of those plants. And even telecom networks, it is a circle wise. For example, Telangana Geo Circle, entire Telangana Geo Circle is managed by us, which includes 35,000 route kilometers of fiber and 35,000 numbers of telecom towers we are managing right now. Then IPP is yet to start. Right now, we are in the process of pooling the land and as well as the connectivity approval. Once it is done, actually maybe post 2 quarters, actually work is going to start in this IPP projects. In addition to this EPC services, we also have other energy efficient products, energy efficient products manufacturing in and around Hyderabad. Manufacturing plants are there. As I mentioned, this one is under Bondada Green Engineering. We fabricate all the structures required for telecom towers, transmission towers, substations, and solar MMS structures. It's going to be a big business, and it's going to be a big company also, because huge volumes are there. As I mentioned, not only our captive consumption, we are also supplying to the other EPC players and even other developers, solar developers also. And another company called, we have Bondada Eco Build, where we manufacture all energy efficient green construction products, building materials, building construction products, AAC blocks, UPVC windows, aluminum windows and doors. For UPVC windows, not only just making of customized windows and doors, we also manufacturing the back-end integration as a part of Atmanirbhar Bharat. Earlier, we used to import that extrusions for this UPVC windows and doors. So now actually we started even manufacturing of extrusions in Hyderabad. It's a completely powder to profile. Powder to profile is the process is powder to profile is meeting to European standards and competing with the Indian and Chinese prices in India. So then another arm we have is Bondada E&D Private Limited, where we are manufacturing LED lighting solutions for industrial lighting solutions, and predominantly now solar street lights, smart solar street lights. Because most of the governments and most of the renewable energy development authorities are now in the transition of regular street lights to the smart solar street lights. So we are getting big orders in this space, in this company. And also we have one more company called Epol Technologies Private Limited, where we manufacture BLDC motors for various applications like EV, home appliances, even agricultural products, even defense products also, defense appliances also. So all these companies are doing good. Last 2 years, last 1.5 year, their growth is very good. And right now, this composition of revenues is almost around contributing. All these products are contributing around 10% in overall consolidated company. Next.
This is more of a journey.
So it's more of a history actually. It's a journey 2012 onwards, but I'm not able to see very clearly this actually. But okay, we will share this presentation. You can go through that. It's a more of a history of 2012 milestones. Basically, 2012 we started with the telecom infrastructure services. Slowly, we ventured into the building materials business, that is AAC blocks and UPVC windows, setting up the factories in and around Hyderabad and Vizag, and then supplying it to the Telugu states, this AP and Telangana. Then we in 2017 into the solar EPC segment, private developers, and by 2022, we got good credentials in solar EPC. Then we started bidding for all public sector companies. Now, our portfolio in solar is 1 gigawatt is commissioned, almost 2.5 gigawatt is in work in progress, including that recent 650 megawatt of Adani's also. It is now converted into the work in progress. So 2.5 gigawatt is in work in progress, and another 2.5 gigawatt is in L1 stage, where we have to get the orders and then start execution. So it's almost now we have the portfolio of almost around 6 gigawatt of solar EPC portfolio. In addition to this, we also have another 2 gigawatt IPP is there. That is, this journey has started from 2017 onwards. And in 2023, this company is listed on BSE SME exchange. Actually, in 2022 end or 2023 beginning, we got very big order from BSNL, that is 4G saturation project. That is that time actually that was the one that was first ever, that biggest order what we got is around 1,500 crores. With that order, actually, we came to market. Market is perceived as very well, and then thereafter, actually, whatever that story you're all seeing of your company. So 2023 onwards, we have been shifted from operating small projects at various places to now big scale projects. Now, now our smallest project is around 300 crores. To biggest project is up to 2,000 crores. Now we have the credentials to even participate in tenders, like financially we are qualified up to 4,000 crores, and technically we can qualify. Technically we are qualified up to the 1 gigawatt to 1.5 gigawatt of single largest plants. These are the credentials we built in over last 6-7 years, and going forward also we will continue to build this kind of credentials, and then we will perform even in future. Next. Yeah, it's a board of directors. Next. These are independent directors. And this is the main business unit heads and key management team. Rear Admiral Srinivasan Garu is joined us 3 months back as a group CEO. He is retired from Indian Navy and as well as the MOD, Minister of Defense. And is a Visit Seva medal holder, and now taking care of complete operations and systems and process and policies of Bondada Group. Uma Maheshwar Ram is director on our Bondada Renewable Energy company, and he holds the complete solar EPC business. M.A.D. Prasad mainly takes care of our Bondada Green Engineering production facility. Pradeep Alapatti takes care of this Green Bond RE Park of our solar IPP project. 2 gigawatt IPP project. Mr. Surimurthy takes care of telecom business. Varaprasad takes care of Bondada Ecobill, and Ravi takes care of Bondada E&E Private Limited, and Jagdish takes care of Atpol Technologies. These are all on respective companies' directors. And this is another team under them. Actually, these are all at COO levels and CTO levels. There actually Rajesh is there, our Vice President Quality and Safety, and Deputy CFO Madhu is there, and Sonia Birla, our CS and Compliance Officers, Compliance Officer, and Sanjay takes care of as a COO Renewable Energy. Next. This is it.
Already discussed.
Yeah, I think this fairly we discussed this point, and any questions related to any point actually you can ask, so that actually more than I am giving the presentation, I think you all might be knowing about your company, but you can ask any kind of questions related to business, related to financials, related to future prospects. We are here to answer. Yeah, this already I explained actually. Without seeing this slide, actually I already explained. Next. These are the customers. Top line is belongs to telecom customers, and second line belongs to all our renewable energy customers. And prospective customers are Coal India. We have participated one tender. NHBC, we are participating some tenders. NTPC. We have participated some tenders, and we are expecting some orders from NTPC also, and even for Gujarat Fiber Grid is also we participated one tender. Yeah. Now these are the better actually. Instead of I am explaining, actually, if somebody can ask me the question, I can explain actually what is my capabilities and capacities instead of me explaining all these traits and the derivatives.
Sir, if you want, we can go to the way forward slides and then move to Q&A.
Yeah. So this is what our Vision 2030 is to achieve 25 gigawatt of renewable energy, which includes solar EPC, solar IPP, and even BESS. Here it is a combination of all, because BESS also we are treating under renewable energy only as of now, though actually BESS is to be installed at regular grey power as well as the green power, and strengthening of telecom leadership for digital Bharat as well as the 5G expansions. That definitely we'd be leading this telecom infrastructure services in India. Already we are leading. This is the company, one of the largest tower deployment company, tower deployed for all the operators. So far, actually, last 14 years, we have deployed around almost 30,000 towers across Pan India. So that railways one is very recent one. Based on our telecom credentials, we got into this railways Kavach safety projects. Now one order we got, and so many tenders we participated, and we are pursuing few more areas in railways, not only just this Kavach passive infrastructure, and even other safety projects like crash barriers and even other safety projects also. For railway signaling safety projects also, we are participating in tenders, and we would like to grow in this segment. Scaling up of data center services to power the digital economy. That is another one that actually maybe next 3-4 years here also we can see your company can have that sizable and good reasonable impact on these two segments like data center and as well as the defense segment. Finally, we would like to become $1 billion company by 2030 by doing all these things and 25 gigawatt of renewable energy deployment. Yeah. This is one slide regarding that BESS. What I'm trying to talk is actually BESS 2. As of now, all the tenders are going on with BESS build, operate, and own for next 12 years to 14 years. That's what actually our contract of that TNGECL, the 200 megawatt by 400 megawatt hour as of now. And we will continue to participate this kind of tenders in BOO. And once it is BOO is done, then operation and maintenance also will come into the picture. And then even standalone, we are not going to own this system, battery energy storage system, but actually we can also work for EPC as a EPC player for most of the public sector companies like NLC and TPC. All these people are coming with a lot of tenders on their power transition phase. So we can also play as a best EPC players for these companies. And this best, most of you now knowing that actually this is going to be a huge $1 trillion business in India. In next, we have targets for 2032 and 2037 and 2047. We have, because there's a lot of unstable frequency matches and instability in grid stabilization is there, because a lot of renewable energy is coming in, and in that too in some sort of time slots it's coming, and you have that regular power is there to match that peak hours to non-peak hours, peak hours to non-peak hours, and to give some of the clients to the clock power. This is the solution. Energy storage is the solution that we are focusing. India is focusing. India is putting huge thrust on this energy storage. I think this is going to be one more flagship business for us. Battery energy storage system. Next.
Data center.
Yeah, data center, and as I mentioned, actually data center and the defense, we will explain them maybe after some time. Huge brainstorming is happening in these two things. How we will deal this data center business, whether EPC or BOO model, or owning the data centers, and even defense also. How we are getting into this defense sector also. What is that we are going to do? We will come back to you very separately on these two segments.
So financial performance and highlights, I would like to take you through. We have about 7-8 slides on this. Coming to, let us start with the order book, what we have at this point of time. So as on date, as of yesterday, we have an order book of close to 6,000 crores. Out of 6,000 crores, the breakup is renewable energy, we have 4,573 crores. Telecom, we have close to 1,000 crores. And Indian Railways, we have about 228 crores. And products, including our steel products, we have about 190 crores. So in terms of L1 stage, as of now, we have L1 status orders to the tune of 2,600 crores, for which we are awaiting for the LOAs to come maybe in next couple of months. And apart from that, with this L1 orders, if you add, it will be close to 6,000 plus 2,600, 8,600 crores of order will be on hand as of now, once this L1 becomes the LOA. And apart from this, we have participated tenders to the tune of 7,500 crores. As of now, tenders are already submitted and technical evaluation is already done. That financial bid is yet to open. Our previous history of cracking the orders is about 25% at this point of time. 25%. Even if we take the historical numbers, out of the 7,500 crores, we have pretty chances of getting a winning ratio of 25%, which is close to 2,200, 2,300 crores. So after our endeavor is by end of March 2026, we would like to have a closing order book of anything in between 8,500 crores to 9,000 crores, which is more visible and which is more likely to happen.
Yeah, this 2,600 crores in addition to this 6,000 crores.
Yeah, that's totaling to 8,600. And apart from this, IPP 2 gigawatt, it's already on hand. As per the government order, it's close to 9,000 crores. Apart from the whatever numbers we have discussed so far. So in terms of half-yearly highlights, the crux of the meeting. So we had a revenue of 1,216 crores in the first half year, as against last year of 480 crores. 480 crores. So we have a revenue growth of close to 153%. If we see on the quarter-on-quarter growth, this half year, first half year, we have 520 crores of revenue against with 40%. And if you see previous second half year, we had revenue close to 1100 crores, against which this half year we did about 1200 crores with about 15% of growth rate. These are the numbers in terms of revenue. EBITDA, if we see, we had 143 crores of EBITDA. Though the numbers are in millions, I am actually telling you in terms of crores for more reachability. And EBITDA margins, we are close to 12%. Actually, this presentation, we made it in millions to reach to more explanation. Yes. So in terms of net profit, if you see, it is 92 crore this half year, as against last year, it's 36 crores with again with a growth rate of 150%. And coming to the ratios, which are we have shown here some of the very, very important ratios. So return on capital employed, we have annualized for the first half year, which is close to 30%, as against 23% of last full year. And the return on equity, it is close to 30%. Annualized is 30%, as against 23% of last year. Debt equity ratio here, debt, we don't have any long-term debt at all. We are actually considering debt here means even working capital debt. Even after considering working capital debt also, our debt equity ratio is 0.3 as against last year's 0.35. It's almost intact. If we consider that only long-term debt, there is hardly any debt equity ratio. And the current ratio is close to 1.5%, and interest coverage is about 8.5 times. And if you see on the working capital cycle, compared to last year, we have progressed a lot in this first half year in terms of collections and in terms of managing the working capital effectively. Our debtor days have come down from 125 days from last year to 107 days in this year. And in terms of inventory, last year, it's 45 inventory.
Last time.
Okay, current year, it is 52 days, and the creditor days from 108 days to 70 days. So on an overall cash conversion cycle, if you see, it has come down from 110 days to 90 days, which means almost a kind of 4 times working capital churn is there in the first half year. And we expect to continue the same kind of working capital efficiency and effectiveness even in the second half year of this company. Next.
Revenue mix. So renewable energy 78%.
Okay, in terms of revenue mix, if you see, we have revenue from renewable energy to the tune of 78%. And 10% revenue came from our telecom segment, and even close to 8 to 9% came from our products range, which is basically from the subsidiary companies. And half yearly, this is more of an income statement which we have already discussed compared to previous last year of H2 and last year of H1. There is a growth and year-on-year growth and half year to half year growth. These are all numbers we have already discussed on that. Next one. So in terms of CAGR of revenue, if you see, it is in the last 5 years, we have about 40%. Okay, in the last 5 years, CAGR, we have about 41%. But if we see in the last 3 years, it is close to 100%, last 3 years. And in terms of EBITDA, we have a CAGR of 61% in the last 5 years. And net profit, we have a annual growth rate of 66% over the last 5 years. If we consider 3 years, in all these 3 parameters, we will be close to 100% of CAGR if we consider last 3 years. Next. So this is the income statement of the last consolidated revenue operations. Yeah, in this one more point, what we would like to highlight here is till 31st March 2025, we have drawn our balance sheets completely under IGAAP procedures. Indian generally accepted accounting practices. However, actually, as per the statutory guidelines, we are supposed to switch from IGAAP to Ind AS, which is Indian Accounting Standards. This half year, the first half year balance sheet is done completely under the rules and the guidelines of Ind AS. Next. So this is on the balance sheet side, assets and liabilities. So in this 2-3 takeaways is the company as of 30th September 2025, the company has a net worth of 610 crores, rose from 476 crores. The difference being two major components. One is the first half year internal accruals, that is profit. And the second one is we have got amounts from share warrants issues, which is close to 40 crores. So there is an increase of almost a kind of 140 crores from last March to this September. In terms of the size of the balance sheet, if you see, it's completely almost a kind of 1,489 crores of balance sheet size, as against last year's 1,200 crores of balance sheet size.
EPS.
And in terms of EPS, if you see, EPS we have not given it. Yeah, in terms of EPS, last year we had an EPS of 10 rupees per share, and for the annual full year basis. This year, for half year, we have 8 rupees 3 paisa for half year, which is not annualized. Even if we take a simple annualized ratio, it would be about 16 rupees for the full year. But generally, our revenue ratio in the first half year to second half year, as told by my CMD sir, it's a kind of a first half year. We generally report 40% of the revenue, and 60% is generally reported in the second half year because of the seasonality issues in the first half year. If we take that ratio into consideration, our EPS would be a bit more based on the actual performance what we are going to have in the March. Yeah, this is all about the balance sheet, and we have uploaded this balance sheet along with the P&L and the cash flow statements. I forgot to mention one more point on the cash flow side. Actually, last year we have operating cash flow negative of almost a kind of 140 crore negative. And against that 140 crore, this first half year, we managed well in getting the collections. We have almost got about 1,200 crores of realization in the first half year, that including GST receivables and all. And after considering that, our operating cash flow for the first half year is minus 43 crores negative. And we are striving hard even to have positive cash flow by March 2026. And our efforts is always on for that.
Sure. Thank you, sir.
And maybe, yeah, with this, I think we are pretty well covered all the points what is required to be covered. And
Sure.
maybe we can now open up for the question and answer session. We are happy to answer any of the clarifications.
Sure, sir. All those participants who wish to ask a question may use the option of raise hand. In case there's a problem at your end, you can drop the message in chat. So just one more thing, there is some bandwidth issues at your end. So there are chances that people may ask some questions related to some of the slides that you presented. So
okay.
With that, we'll take the first question from Mr. Hardik Gandhi. Hardik, you can go ahead.
Can we off our camera?
Vinay, do you want us to switch on the camera of ours, or we can off the camera? Because of the bandwidth issue, if we switch off the camera, maybe the bandwidth may go improve actually.
We can do that, sir. We can do that.
We'll do one thing. We'll try to do this one. If something is happening, then we will. Yeah. Hardik Gandhiji, good morning.
Good morning, sir. Congratulations on the absolute set of numbers. I hope I'm audible.
Yes.
Yeah, please. Thank you.
Yeah.
Thank you.
So two major questions from my end. So we are going from an asset-light model to capital-intensive businesses going forward, which I'm seeing the IPP as well as the defense front, where it will be a high capex business. So how are we set for the future in terms of funding, working capital, and other things?
What's his name?
Gandhi.
Yeah, Gandhiji. I think it's not. First of all, it is not very big asset holding company. Now, if you see that total 25 gigawatt of our total target, only 2 gigawatt we targeted is IPP side. IPP side requires the asset. And whatever the best side is also BOO actually, it is only just 4 gigawatt. 2 gigawatt. Best side is also 2 gigawatt. Rest are only EPC. Not much very big asset actually compared to the total overall target of the company. Yes, for this 2 gigawatt of BESS and 2 gigawatt of IPP is also. Now I think Satya, you can explain that actually how we are able to manage, how we are able to. But actually, perception among you people needs to be changed, that actually it is not very big. We are not going to shut down our EPC business and then so completely getting into the IPP mode. Actually, out of total 25, it is not even just 20% of our targets are from capex mode, is a asset holding mode. That's what I just want to clarify.
So out of this 25 gigawatt, Gandhiji, actually what
Yes,
we
sir.
are planning is about close to 21 gigawatt we will be doing EPC projects only in terms of solar plants and in terms of BESS EPC, and 2 gigawatt of solar park and 2 gigawatt of BESS we are going to establish on our own, which needs definitely capital requirement. And regarding this capital requirement also, whatever this 2 gigawatt plus 2 gigawatt we are planning under IPP model, it is not going to happen overnight. It's going to happen over a period of next 5 years. And we are planning in such a way that we are going to have a phased manner implementation. Let us say out of this 2 gigawatt of solar plant, we would like to take up to 50 megawatt to start with in the first phase. And then once we complete that, we will be having another 500 megawatt. Likewise, we are going to implement in a phased manner. So in between, we will have some timing. Some disturbance coming.
Hardik,
No,
there is
no,
some disturbance at your back end.
Okay, I'll just mute.
No worries, no worries. If it is from your side, okay, you have to switch on your mic. So that way, let us say as of now, we have a almost net worth of 610 crores, against which we don't have any term loan. So the company has huge appetite to raise that term loan debt at this point of time. So based on the requirements, based on the implementation phases, we will be raising debt as per the requirements of the project. And also accordingly, maybe down the line 1 year or 1.5 years, if required, even we are ready to even dilute the equity to the extent it is required based on the time's actual capital requirement.
Yeah, because
So
I saw defense also. Sorry, but I saw defense also. So if we are if we are planning to do any tie-ups in the defense front, right? So I'm assuming we will be required to set up a manufacturing facility for the same. So that would also require a huge capex. Understand until I'm missing something.
Mr. Hardik, your suggestion that the defense requires a very high, capital infusion is in general correct, but that depends on the kind of areas that you select to foray into. So we've been extremely cautious, not getting into very highly capital intensive areas. There are a few areas which are not so high in capital, but they do depend and they do focus on the IP that you are holding. Since it is a greenfield company, since creation of IPs in defense takes a bit of time, we are looking at acquiring a few companies which have a very valuable IP and which comes to you at an affordable price. So as our CMD Garu mentioned, in a short while you will hear an announcement from us in the areas in which we are foraying into, and then what are the acquisitions that we are doing, and then what are the tie-ups that we are going to have with the tier 1 vendors of defense.
Understood. And the last question from my end is, yeah,
Mr. Gandhi, in short, actually, company is not under pressure of capex capex rising now at this point of time. But yes, you rightly mentioned that actually some point of time it will come. But that time actually we will use whatever that instruments that we have and whatever the opportunities that we have, we will use and then we will go take it. But we are very much cautious and conscious that actually, so not hampering that existing projects, not diverting our EPC focus and doing some other things that needs to be taken.
yes,
Hardik, one last point is definitely this company is going to execute EPC contracts on a long-term basis. But definitely our kind of company for a long-term sustainability, definitely we need to have some kind of annuity revenues, which is what we are wanting to build up for a period of time.
understood. So, and the last thing on the BESS front, because I'm seeing a lot of things happening on that end, right? We have seen Ola coming up with a whole new technology. So, Just to understand, what are your thoughts on that? Will there be a technology disruption? How will you source your BESS containers? Will it be from China, or will it be sourcing locally? So just wanted your thoughts on the technology as well as the market as a whole.
Yeah, this BESS battery basically is a battery. Is a completely we are depending on China only, because cell manufacturing in India, that ecosystem is not developed as of now. So far, whatever the cells are there for that, cell is a major component in battery, which is almost occupying the 50% of the total battery energy storage system, the energy storage system. That all 50% we are depending on the China. As of now, it is a lithium-ion technology, but technology is rapidly changing, and there are other even technologies are coming, and we have to sail with that this rapid changes in this battery energy storage system also. But as of now, we are depending on the China. And if technology changes are there, including that rare earth metals and all those things, a huge focus. Even India is also putting a lot of huge focus on this, how to develop this ecosystem. Like actually, you have seen that last 10 years, we don't have any solar module manufacturing units in India. Even last 10 years, actually, huge capacity is built in solar module manufacturing. Now that India is focusing on that, actually, how to even manufacture the solar cells. Right now, all the module manufacturing people are importing cells from China and then manufacturing the modules over here. Likewise, this transition will also takes place, but we have to sail with that. As you rightly mentioned, that actually this technology is changing very rapidly, and we are on it. It's not that nothing we are away from that. Actually, we are on it.
Understood, sir. Thank you so much. All the best.
Thank you.
Thank you, Hardik. We'll take the next question from the line of Urmisha. Urmish, you can unmute and go ahead, please.
Yeah, am I audible?
Yeah, Bhumiji, you're audible.
Yeah. So a couple of questions first, sir. The current order book execution timeline, if you could give some color on it.
Okay.
Okay, one by one. Oh, yeah. Yeah, current order book is standing almost around 6,000 crores, which is almost around 4,500 crores is coming from renewable energy, but that is long-term contracts. As in nature is the long-term contracts that we need to deploy anything between another. Most of them are in work in progress, but it takes another 2 years to complete this. Thereafter, actually, in this 4,500, we have almost around 400 to 450 crores of O&M contracts are there, which will run next 3 to 5 years of time. Coming back to this telecom 1,000 crores, that in telecom 1,000 crores, 400 crores is the EPC contract, which we are going to complete in next 6 to 8 months time. And another 500 to 600 crores is there next 5 years of O&M contracts. These are also another O&M contract will run in next 5 to 6 years. 5 years time. And rest all is actually this our railways around 228 crores, which needs to be completed next 15 months time. And products is a cycling monthly billing. This is the kind of timelines which we have as of now. But any solar project which we are getting even in future also, standard timelines for this completion of this project is anything between 15 months to 18 months. Thereafter, 3 years to 5 years of O&M operations.
Right, sir. So, sir, we have had such a strong H1. So, based on these timelines that you have just elaborated, how do we see to end FY26 with revenue, and with, if you could give some color on the sustainability of the margins as well, because we have given very strong set of numbers in H1.
Yeah. As I mentioned in even previous discussion also, your company always reports actually 40% of revenues in first half. Actually, in fact, 35%. This year, actually, we could do better. It's a 40% of our target comes in first half. 60% of our target for this year will comes in second half. I think that projects the pace of the projects and then cash flow requirement and manpower deployed and resources deployed. Yet projects are very much intact, and I am very much comfortable and confident that actually that 60% of our target can be delivered in second half. That is in terms of revenue and margins. Same projects, same budgets. I don't think any problem in margin also. I think we are going to sustain both EBITDA, PBT or PAT margins. Maybe 100 basis points increase will be there because of large scale operations because economic scales, economy of scale. Because slowly, quarter on quarter, actually, our size of the projects are increasing. Earlier, we used to do 100 megawatt. Now we upgraded to 300 megawatt. Now we are upgrading to 500 megawatt as a single phase. So large scale economy is relatively playing on us on our margins. So I think we are going to either sustain these margins or we are going to improve maybe 100 basis points.
So because of the bandwidth issue, I couldn't get when you were explaining the networking cycle slide. So what has led to the improvement? Because it has been a tremendous improvement this time.
First one is order book and commitments to the customer that drives everything. First one is order book that we have taken and then committed to the our commitment to the customer. This again, this company never ever defaulted in its commitments of on-time delivery. So once we are delivering projects on time, everything will fall in place. Your cash flows will fall in place. Your revenue targets fall in place, and your customer comfort. More than this, actually, I look at my customer comfort will fall in place.
Okay, so the 90 days around, can we expect this run rate to go forward?
Yeah, we are very much sure.
Okay, sir. Thank you. And yeah,
because actually, whatever the projects
yes, sir.
Whatever the projects we delivered in H1, the same projects are continuing in H2 also. Predominantly, the same projects are continuing in H2 only, same customers. So I think whatever the ratios which we have reported in H1, I think are going to be intact in H2.
Okay, sir. Thank you and all the best for the future.
Thank you.
Thank you, Ramesh. We'll take the next question from the line of Amit Agicha. Mr. Amit, you can unmute and go ahead, please.
Yeah, good morning. Thank you for the opportunity. Am I audible?
Yes, sir.
Yeah, Amit.
Congratulations, sir, for good set of numbers. Actually, sir, I have emailed my questions, and I will just ask one question over here. Like, can the management explain any execution constraints or seasonality which you're seeing, like constraint to like labor, supply chain, or site readiness or grid approvals that could affect H2 visibility of the revenue?
Yeah. I will take up. Actually, I think when you have emailed your questions.
Today only in the morning.
So he has sent it today, and we replied to him to join the call.
We are all busy in this earnings call since morning. Definitely, we will reply to your questions. But this question I will explain. That yes, definitely seasonality impact is there on our deliveries. Normally, that is there in the second quarter. Normally, it is in second quarter of any financial year. Actually, we face a lot of issues. But that's what I told. Actually, having in spite of very intense rains in Maharashtra and even Gujarat, even Andhra and Telangana this year, actually, our projects are intact. But third quarter and fourth quarter is fairly good that actually we can able to deliver the projects on time. Coming back to the requirement of resources deployment for this kind of volumes is already set. As I mentioned, last 25 years of my presence in India, I have my own subcontracting system. I have my own subcontracts in each and every state. For example, actually, now Khavda, we have started our presence with NLC with 600 megawatt. Now we have taken around another 650 megawatt of Adani. And Adani, we are going to dedicate some of our capacity for next 3 years. That's what our discussions are happening next 3 years time. for which Adani actually we are making very big setup is a permanent setup for which caters for next 3 to 5 years. That can be a labor colony, that can be our officers colonies, and even with including medical facilities and all those things we are setting up. Always HR and that human resources and then labor is always an issue, but we have some edge over these issues. We are able to tackle these issues and we are able to manage our projects by giving the on-time delivery to our customers.
And so is it possible for you to give segmental margins, like how much is the margin in renewables and how much is in telecom and how much is in like railways and the products?
Yeah, we can.
I'll answer.
Renewable energy and telecom, basically these are EPC contracts only. Normally EPC contracts, whatever that margins we reported actually is because even if you see that total revenue, renewable energy revenues is contributing almost around 79 to 80%. Whatever that profitability is there in renewable energy, it is predominantly it is of the total company's PBT. In EPC contracts, we are PAT of 7.5%, PAT of 7.5%, and even O&M services little bit high, which is almost around 10%. Products is around 10%. But as a overall, it is coming around 7.5 to 7.6% because those high margin segments are very low volumes. But majority of EPC is at 7.5%.
I appreciate you answering my questions in detail. Thank you, sir. All the best for the future.
So we'll take one question from the chat by one of your shareholders, Mr. Vinod Kumar Kakrania. Vinodji, you can go ahead and ask a question.
Yeah, good morning to all of you. Actually, my question was that I wanted to ask why is this that the trade receivables are very high? I have been seeing that the trade receivables is at around 700 crores, which is around 57% of your first half revenue, the first 6 months. So if you can shed some light that are you planning to bring down the trade receivables in future also?
Yeah, in terms of trade receivables, your question, yes, it is 57%. Or if you take the percentage on the half-year revenue, it is 57%. If you annualize it, it is close to about 27-28%. Even if you annualize it on a regular multiplication of 2. 700 crores of receivables for a revenue of 1200 crores for the half year is very generic in any EPC contract. If we take the industry average also, any EPC contract will have turnover debtors percentage of 30 to 35%. In that case, in fact, if you see our receivables, we have managed very well. And the second thing is, if we compare with last year's receivable number of days, last year, 31st March 2025, we had about 125 days receivables. Whereas in this first half year, we have managed to bring it down to 107 days. So in terms of number of months, if you see, it is close to 3 months or 3.5 months. We shouldn't take it as a percentage of half year revenue. You have to annualize it. If at all, you have to see on a percentage of revenue. What we are doing here is we are taking the closing debtors value and we are comparing with the percentage of half year revenue, which is not correct. I hope I clarified your point.
Yeah. It's fully clarified.
You got my point. Now, 57% is coming if we consider the half year revenue, boss.
Okay.
Yeah, in fact, actually, out of the 700 crores, almost around 250 crores is reported in last month, September month itself. And the second quarter itself, it is our revenue is almost around 700 crores. So, one more thing is actually out of the 700 crores, around almost 130 crores is our retention money. Retention money we will get after the completion of the projects because in each and every bill, my customer will hold it 5%. For some contracts in 10%, some contracts are 5%, which is accumulation of around 130 crores retention money is there, which we will get once project is completed against submission of bank guarantee, or we have to wait 15 months to 18 months of defect liability period. But as a overall, we are not finding any cash crunch or
In fact, first half year, the cash conversion cycle has
Cash conversion cycle has come down from 110 of last year to 80 days now, which is which should give a lot of comfort, not only to you, even to us too.
Yeah. And one more question I had.
I would say that 57% comparison comparing to taking consideration of half year revenue may not be appropriate first. That's our
Your point is taken. I had one more question. You are envisaging to double your revenues by the current financial year end and tripling the revenues by financial year 27 end. That would mean revenues close to around 4,500 crores by financial year 27 end. Are you confident of achieving this target?
And the past record in the last 2 years itself actually, speaks for it. And in fact, it's a very conservative estimate in case of you, if you look at our past performance in the last FY and then in the H1 this year.
Yeah, it is actually, boss. I already answered this point actually. It's all driven by customer commitments. It's all driven by customer commitments. You need to see that actually what is my order book. If order book is there, confirmed order book is there, by any means I have to deliver. Any means I have to deliver means there is no depth of work actually, which we have to deliver. Once we are delivering means these numbers have to be reported.
Correct. And if you can shed some light on this Andhra Pradesh project that you have been allotted, the 2 gigawatt solar IPC project. When will the project start and when will the revenues come on the books of the company?
It takes time. It takes time because actually a lot of land needs to be pulled. Out of total 9,000 acres, actually we have started pooling 3,000. We identified 3,000 acres, and that 3,000 acres of land pooling will complete in next 4 to 5 months of time. And once land is there, actually we are applying for CTU through land BG route, and we have to apply for that CTU with the land BG route. And once CTU is approved, then we have start bidding for that IPP projects. But maybe 250 megawatt of IPP project will happen in next financial year. And that will go another 4 to 5 years. I think Satya is already explained during the presentation call how we are going to deal with this 2 gigawatt of IPP and 2 gigawatt of BESS. That will happen next 4 to 5 years.
So what is the kind of revenue you are envisaging from this project in the coming years?
What is that?
From IPP, what are
that 9,000 crores is the investment. 9,000 crores will come as a EPC revenue for us in next 5 years time. And once it is based on the size of the plant, actually, that we will get annuity revenues. Maybe if 250 crores is there, actually, we will get almost around first year itself around.
Maybe once we complete the entire 2 gigawatt plant implementation, from this entire 2 gigawatt of plant, we will be getting a kind of 1,000 crore revenue per annum.
Per annum for next 25
on an annuity basis for next 25 years.
1,000 crores per year for the next 25 years.
Make it very simple.
Yeah.
Yes.
Thank you.
Thank you, Mr. Vinod. I would request all the participants to please restrict your questions to 2 since there are many in the queue. We'll take the next question from the line of Vimal Parekh. Vimal, you can go ahead, please.
Thank you very much for the opportunity. A very good morning and great set of results. I think a great execution is why these numbers are showing. I had a question largely. So am I audible first? Just wanted to check.
Yeah, you're audible, sir. Please carry on.
So I just wanted, my questions are more towards your future businesses, which is the energy storage, data center and defense sector. And wanted to understand what kind of a capital outlay are we talking here? And will we have separate teams for each of these divisions? So that would be my first question.
Okay. So in terms of BESS and in terms of solar plants, We have already clarified
Yeah,
that,
already
but
clarified.
yeah,
2
but
gigawatt.
yeah.
You can
So
take it as 2 gigawatt.
solar plant, we will be implementing 2 gigawatt of plant, which is already allotted to us from by government of Andhra Pradesh through a separate government order. And in terms of BESS also, we would like to establish 2 gigawatt capacity BESS across India, maybe in next 3 to 5 years of time. So this is totaling to 4 gigawatt capacity on IPP model or build and own and operate model. And whatever capex needed for this over a period of next 5 years in a phased manner, we will be addressing through debt and also in terms of equity by diluting some of our existing equity. That's what is our plan at this point of time. Mostly, we would be requiring the first tranche of debt maybe in 2026 beginning, first quarter of 2026. And as of now, our balance sheet can take the appetite of raising debt up to about 1,500 crores, which we can very much raise as per the balance sheet credentials. And we will start with raising the debt, and as and when it is required, we will even ready to dilute some of the equity by raising equity through either preferential issue or rights issue.
Okay.
That is for 2 gigawatt. But coming back to the data centers, to start with, actually, we are not looking at very big size of data centers. The way people are talking about the Google data center and the Microsoft data center, which we are not getting into that. There are other so many opportunities are there in data centers. Small data centers are there of less than 1 megawatt, even less than 1 megawatt data centers are huge. The volume is huge. Which first actually we will enter as a land pooling and creating the complete ecosystem for a data center and giving the power and giving the fiber to the data center. We may not be owning the data center till we get the anchor customer in the data center. That doesn't require much capital requirement for data centers. We understand for 1 or 2 years of this ecosystem, then we will start owning the data center maybe after 2 years. Maybe that time actually we need to have a capex requirement, but which I am not clear on that actually how much is requirement after 2 years. That we will come back to you later. But as of now, this is what our thought process and our work is happening on ground. Defense, you can tell defense.
Yeah. Yeah, defense. We've been us being a greenfield company, we've been very extensively exploring different areas and again different avenues to gather like IPs in the critical areas at a nominal capital infusion. So we are not anticipating anything more than 75 to 100 crores of capex in defense, which our business will be centered around more on IP centric business on high value product, but the low capital infusion.
And are the teams? Sorry, please go ahead.
Yeah, this will also comes maybe of as per our estimation actually will come around 75 to 100 crores. That can be managed internal accruals, boss. Actually, that can be managed. Not now. That will also take another 2 quarters time.
And will there be different teams to manage this, or how is the thought process in the company?
Yeah, different. For each and every business is one dedicated CEO is there. They're all from that complete domain knowledge only. We have renewable energy domain knowledge team is there. We have telecom team is there. We have data center team is there. We have defense team is there. In fact, actually, our CEO group CEO's background is also defense. Actually, he is the Rear Admiral of Navy. He knows that complete ecosystem of defense. Last 5 years of his tenure is in MOD, Minister of Defense, in procurement itself.
Okay.
But notwithstanding, we will have a separate move for defense vertical.
Sir, on the defense side, is there any particular area that we are looking to concentrate? I understand that you're looking to actually acquire companies which are IP centric, so which probably have some tie-ups with DRDO for technology. So is there something identified, or is there any other area that we have already identified?
Area I may not able Close it to you now, Mr. Parekh, actually, just give us another 1 quarter time that actually we will come back to you with kind of sizable MOU with either one PSU and one international company. I may not able to disclose to you at which area which that we are focusing on, but it is going to be a IP centric with huge impact on defense products.
Thank you. Thank you so much and wish you all the best. Thank you.
We'll take a few questions from the chat window. There is a question from Mr. Jatin K. Under BSS EPC, what is the revenue potential per megawatt?
Under BSS EPC. So,
what is the revenue potential per megawatt?
It is actually dynamic in nature. Every quarter it is going to be changed. We can't tell at this point of time. But I think currently it is happening per megawatt is about 2.5 to 3 crore in between.
Including both the AC and the DC together. But it all depends upon the scope of the work actually. Some substations comes with the complete AC readiness. Some substations comes with even you have to supply the power transformers. So you cannot tell like that. But as a DC side, I can tell that actually what's going on. But AC side is entirely different because it all depends upon the setup which is available in that particular substation. DC side, anything between 1 crore to 1.2 crore per megawatt hour. I am talking per megawatt hour is going on in the country.
Which means per megawatt it is anything in between 2.5 to 3.
His second question is for BESS IPP BO projects, what is the capital cost per megawatt that the company may have to invest?
IPP 2 gigawatt?
No, that's less something.
Same.
Whatever EPC, the same kind of cost would be required to be invested.
Maybe here and there, few lakhs here and there, it is the same.
Sure. There's a question from Raju Gupta. How do you see BESS segment growth for next 2 to 3 years? And how much can we explore till now? And what is the opportunity in the coming year? How much have we explored till now? And what is the opportunity in the coming year?
Yeah, right now we have order book of around 850 crores. 850 crores of BESS order book is there, and even next 5 years I can tell that actually this will go 100% CAGR. This order book and even execution will go even. I am very optimistic at this point of time, so it can go more than 100% CAGR in next 5 years time.
Okay. Thank you so much, sir.
We take the next question from Darshit. Darshit, you can go ahead.
Hi, sir. One question I have on the receivables. So you had briefly highlighted that the Q2 revenue itself was close to 700 crores. Yeah. So out of the 700 crore receivables, are any of them longer than due for 6 months?
700 crore means it is less than 6 months now. This 700 crore is what we have.
Yeah, are any of these longer than 6 months due out of the 700?
Longer than 6 months is there. That is again retention money. As per the contractual obligations, the customer holds about 5% as the retention money, which will become due only on the completion of the project.
Around 130 crores is there more than 6 months in the 700 crores. So rest all is coming from this first quarter and second quarter only. Maybe few milestones are there actually where plant is not commissioned. That maybe the few crores are there, but otherwise it is completely belongs to the second quarter itself. Excluding that retention money.
Got it. So secondly, on this, Adani, where we have got the 650 megawatt order in Khavda, and you also highlighted earlier that we are trying to put up a setup for them in Khavda, and as we understand and read that Adani is probably going to go big in Khavda with almost plans of putting up more than 20-30 gigawatt. Yeah. So how big this opportunity can be for us in Khavda, if you can briefly highlight that?
Yes, we are discussing with Adani anything between 3 gigawatt to 4 gigawatt in next next 4 years of time, next 3 to 4 years of time. As part of this, actually, is the first initial order is 650 megawatt of one block they have given to us. Next 3 to 4 years, anything between up to 4 gigawatt we can deliver.
Got it. Got it. And sir, in BESS, you said the opportunity is really big, and that's where we have also increased our execution guideline from 10 gigawatt to 25 gigawatt. So, are we going to put any assembly lines to integrate BESS equipments, or we are going to do only pure play EPC? I mean, if you can broadly throw some light on that.
Yes, that's where actually very serious work is going on. That also, please give us some more time now. We will come back to you. That actually whatever we are talking about, actually that battery backward integration, not only just our best applications, that power transition application that will also used for our defense applications. So just give us some more time. We will come back to you with very great detailing and great guidance on this.
Sure, sir. Sure. Thank you so much, sir, and all the best.
Thank you,
Thank
Darshit. We'll take the next question from the line of Vaibhav Logia. Mr. Vaibhav, you can unmute and go ahead, please.
Thanks for the opportunity, sir. Firstly, congratulations on the superb set of numbers. I only have two questions. So what are the risks you are seeing in executing the orders you have as of now? And next question is, what type of margins are you seeing going forward in FY27 and going forward? And do you think the ROC will improve as we are seeing the cash conversion cycle is also getting better? So do you see the improvement in ROC going forward?
Yeah, first question actually that the risks involved. I am seeing this company is reporting 100% year on year in even last 4-5 years and even last 14 years also. I have not seen, means actually where I have not stuck that actually because of this reason, because of this geopolitical reason, or because of some other external reason. Always there is an internal reasons will be there. As long as you are planning better, you are planning your resources in terms of people, in terms of working capital. I don't think any risk in this involved in this. And the segments which we are playing now in renewable energy and telecom infrastructure, or Indian Railways, or BESS, or even defense, I think that you might be more knowledgeable than me that actually how much work is there for next 10 years and 15 years and even 20 years. So volumes are there. Fortunately, we are there in very good growth segments. I am not seeing any risk in that business volumes will come down. And the third point is we are mostly depending on public sector companies and private developers, which are having very good financial strength and cash reserves. We are very least dependent on state governments. So hence, actually, even that whatever that geopolitical things will happen, that also will least impact on our growth potential. Yes, as I mentioned, there is always been a hand to mouth, and then 24/7 work is going to be there to deploying our people in terms of working team, in terms of labor, in terms of creating ecosystem, in terms of working capital management. This always be there. We are there to manage those things only. That is about risk. Second point, what is the second point?
Will there be any improvement in the return on capital employed for the future projects?
Yeah.
Yes, definitely. His name is Vaibhav, no?
Yes, sir.
Vaibhav, definitely we can expect in terms of return on capital employed improvement for the ongoing projects and upcoming projects. When you consider it as an EPC, standalone EPC ROCE, we are expecting a return on capital employed improvement by about 3 to 5% with for the existing ROCE on an EPC model basis. However, in continuation to this, once we come into IPP model, capital intensive model, that ROCE may get corrected a little bit because of the capital intensity.
Okay, understood. And so what is the PAT margin guidance you would like to give for FY27 and going ahead?
That will be intact. Whatever we have been delivering so far, that will be intact. Maybe we'll have a bit better.
We are aiming at
we are aiming at a
improvement
better
by a few points. Capitalizing on the economy of scales and the experience that we gathered over these years.
Okay, understood, sir. Thank you, sir.
Thank you, Vaibhav.
Repeat question first.
Thank you, Vaibhav. We'll take the next question from the line of Heath Modi. Heath, you can unmute and go ahead, please.
Thanks for the opportunity, sir. Good afternoon, sir. I have two questions. My first question is, what is the setup days for the BESS? And another question is, what is the capacity of solar EPC?
No, what is the first question? Sorry, can you repeat your first question?
Yes, sir. What is the setup days for BESS plant?
Setup days for the BESS. Oh, setup days. Yeah. Once we agree the contract once we make the best buy agreement with the customer, actually, they will give around 15 months to 18 months time. 15 to 18 months time to set up the best, because a lot of AC side designing is to be done, a lot of DC side designing is done, and also we have to import that cells and all those cells. So anything between right now that contracts are going with 15 to 18 months time. Maybe by improving this ecosystem in India, maybe it will come down to 12 to 15 months of time.
But our existing contract is having 18 months of time period.
18 months of time. But 3 months is over, another 15 months is there. Yeah.
My another question is about capacity of solar EPC.
Solar EPC is keep on increasing actually. Every year we are in the last year, actually till 2017 to 2024 we commissioned, 2025 we have commissioned 1 gigawatt. Now this year, standalone this year itself we are planning for 1 gigawatt. Maybe next year we may increase it to the 2 gigawatt. That is always been a that's always been a focal point and growth means focus point for us. Actually, we will keep improving as and when we are getting the orders.
So by 2026 it will be 2 gigawatt.
Yeah, standalone year.
But actually, you cannot. But there also you need straight away you cannot multiply with per megawatt cost. Actually, there also maybe some portion is portion with module, some portion is without module. Ours is actually some contracts are with complete EPC, some contracts with only BOS.
Okay. Thank you.
Thank you, Heath. We'll take the next question from the line of Harshal David. So Harshal, you can ask your question, please.
Yeah, hello. Thanks for the opportunity. So I just wanted to ask, what is the total addressable market of BESS, and what percentage will you able to capture it, and what competitors do you have in that market? Thank you.
Yeah, as of now, declared numbers in BESS is actually almost 132 gigawatt to be commissioned by 2032. 132 or 130. That is numbers given by Government of India. Gigawatt hour. But as of now, the total deployment is there less than 500 megawatt hour. I think less than 1 gigawatt you can take, by including all the work in progress also. That is the kind of sizable market is there for next 6 to 7 years. And
what is the cost per gigawatt to set up? Like, what is the company, like, what do you make per gigawatt of BESS that you're setting up?
Is the BESS you are talking?
Sorry.
BESS for 1 gigawatt hour, it is almost around 2,500 to 3,000.
It's almost 2,500 crores or $2,500?
No, crores.
Crores. Okay. No, I was just reading your subtitles here. It came as dollars. Okay. So per gigawatt cost is almost 2,500 crores. So multiplied by 130 is your current size of market that we can get, which is almost 2 lakh, 2.5 lakh crore, 3 lakh crore.
Yes.
And as an EPC player in this field, what is your execution timeline for these kind of projects? So right now, when you said you had an 850 crore BESS project, what's your execution timeline for the same?
Already answered in previous question, actually. I think most of the questions are repeating. I already answered in
Oh,
previous question.
okay. Sorry, I
Yeah,
must have missed that.
no problem, no problem. Ongoing contracts are happening anything between 15 months to 18 months time. But by improving that Indian ecosystem and best, actually, it may come down to 12 to 15 months. But minimum is 12 months is required because to design the AC side and DC side. 12 to 15 months going. Existing contracts are running between anything between 15 to 18.
Okay, and
One
I don't know if you
small-
answered this question also before, but what are your margins for the best business exactly? And is this, yeah, what is the margin exactly?
Yeah, but best actually in two ways. Right now, what we are talking about our best is BOO model, build, operate, and own and operate model. Actually, our IRRs are anything between 16 to 17% is there for this particular project. But going forward, IRRs may come down to 14%, 13 to 14%.
Correct. So this is more of a annuity income almost. It is like I'm setting up something to get a 14% yearly return.
Yeah, annuity income only in BOO model, but we are also there in EPC model also. EPC model is there also the similar competition. Similar competition is there. We might be reporting around 12 to 13% EBITDAs.
For EPC.
For EPC, yes.
Understood. Got it. Okay, sir. Thank you so much.
Thanks, Harshal. Due to lack of time, we'll take the last question from chat participant, Mr. Archit Agarwal. Archit, please go ahead.
Hello. Yes, sir. Am I audible?
Yeah, you're audible.
Sir, my question is about the future revenue bifurcation. So, 2 to 3 years down the line, what will be the revenue bifurcation?
Yeah, as of now, actually, I can give you existing sectors only, but maybe after a few quarters, actually, I will also give our data centers and then defense revenues. But as of now, currently, we are operating around 80% is coming from renewable energy, 10% is coming from telecom, and another 10% is coming from our products, other products. So this will continue. This will continue like this for next 2 to 3 years on today's condition, on today's situation. But if my data centers and defense is also adding in subsequent quarters, that may slightly change. But as of now, these are the situation.
Okay. And from when we can expect the revenue recognition from data center and defense?
Yeah, after 2 quarters. After 2
We'll come back to you on
we'll
this
come
question
back to
after
after
2
2 quarters, maybe after the subsequent time.
On the business model.
And it depends upon the business model. You can see good. Some revenues are flowing in our books, maybe in the third quarter of 26-27
next year. We will keep you posted.
These are all approximate timelines I'm giving. Actually, don't come back and after one quarter you told this much and why you're not doing this. These are all approximate quarters I'm giving it to you. But definitely third quarter onwards we are going to make it happen.
Okay. And my last question is, what will be the capex requirement for this 4 gigawatt of IPP project?
Yeah, it's already answered 2 times, but anyways, Maybe what we can do, maybe you can interact with us one-to-one. We will clarify you, if you don't mind.
Okay.
It's actually already answered.
Okay. Thank you.
We will get your number from Vinay and I'll call you back. Okay.
Okay, sure.
Thanks, Archit. So we'll take one last question in the chat from Mr. Arpit Jain for the 2030 $1 billion revenue vision. Does it also include verticals like railway and defense, or is it only solar, BESS, and telecom?
No, it includes everything. It includes everything, but actually predominantly it is RE, renewable energy, and BESS and telecom only. This one, railways and data centers and this defense may occupy maybe a portion of 20%. 80% will come from these 3 only.
Okay, sure. So that is the last question for the day. I would request you to give your closing comments.
And someone has asked what is it? Okay. Yeah. So, Vinay, I think.
So would you like to give any closing comments or do we end the call?
No. We'll make. What?
Yeah. So you want us to give the closing remarks, Vinay?
Yeah,
Thank you very
anything
much.
if you want.
Yeah. Thank you very much for coming to this call and then patiently listening our presentation and
They're asking very invigorating questions.
Yeah.
which,
So very valid and insightful questions, and we hope that actually we could able to answer all your questions. If you're not satisfied with these answers, people can always be in touch with us one-to-one, so that we are happy to reply over email or call or WhatsApp chat. Thank you very much for arranging this call, Mr. Vinay, Captify, and thank you all.
Thank you, sir. Thank you to all the participants for joining on the call, and thank you to the management team for their valuable time. This brings us to the end of today's conference call. You may all disconnect now. Thank you.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming con calls.